Welcome back. Today, we're diving deep into a massive tug of war that's playing out in the crypto market right now. The market is sending two completely opposite signals. On the one hand, if you look at the fear and greed index, it has absolutely cratered into extreme fear. And yet on the other hand, Bitcoin's price is showing some surprising resilience, holding strong above that $91,000 mark. So what's going on here? Why is Bitcoin holding up when everyone else seems to be running for the hills? Well, we are witnessing a classic battle between two powerful forces, massive selling pressure versus a whole new wave of institutional buying. Okay, let's start by digging into that first force, this overwhelming wave of fear and selling that has so many people on edge. Yeah, headlines like this one from Decrypt, they're everywhere, and they really nail the vibe right now. But this isn't just about feelings. There are very real and very large factors that are driving all of this anxiety.
It really boils down to two huge things. First up, you've got the macro pressure. The Fed is sounding pretty hawkish, which means the chances of a rate cut are dropping fast. That's a huge headwind for the market. And second, and this is a big one, a single whale just moved a staggering $1.3 billion in Bitcoin. That's a massive signal that some early investors are cashing in their chips.
But here's where it gets really interesting. All of that selling pressure, it's running headfirst into a powerful new counterforce. Let's call it the institutional shield. And this is the absolute key to understanding what's happening. It's institutional demand pouring in through these spot Bitcoin ETFs that is stepping up and absorbing all of that selling. This is the force that's pushing back. And we've got the numbers to prove it. After 5 straight days of money flowing out of these funds, which had everyone spooked, boom, they just flipped back to a positive inflow of $75 million. That tells you the big money isn't just watching, it's actively defending these price levels. This chart really tells the whole story, doesn't it? You can literally see those days of negative flows just suddenly reverse into a positive one. It's a perfect picture of that institutional shield we're talking about right there in action. But the story doesn't stop with Bitcoin, not even close. This whole institutional wave is now starting to expand in a really big way. And when I say big, I mean BlackRock, the world's largest asset manager, has officially filed paperwork for a staked Ethereum ETF. This is an absolutely massive development for the space. So why is that word staked such a game changer? Well, think about it. An ETF like this doesn't just give you exposure to the price of Ether. It also earns yield from network rewards. For big money, this completely reframes Ethereum from just being a speculative commodity into an actual income-generating asset. That is a whole different ballgame. And the momentum just keeps on building. This ETF wave is now spreading to other major assets, with multiple firms getting in line to launch the very first spot XRP ETFs. And don't just take my word for it. You have major players in the industry like Bitwise calling this a historic moment for XRP. That's a huge stamp of approval, basically signaling that it's ready for the institutional main stage. All right, so with all these daily battles playing out, let's just zoom out for a second and see how this all fits into the much bigger, long-term shifts that are reshaping the entire industry. What we're really seeing is the foundation of a more mature market being built right in front of us. You've got corporations adding Bitcoin to their balance sheets, regulators finally working towards a clear legal framework, and even new laws that could make stablecoins a core part of global payments. This is the plumbing for real long-term growth. But we do need to keep a level head. We got a pretty important word of caution here from Fidelity. They're suggesting that all this intense volatility could actually be a sign that we're entering the final, supercharged, and maybe the most dangerous phase of this current bull market cycle. So what's the playbook in a high-risk environment like this? Well, the strategy seems to boil down to two key things. First, manage your risk. With the Fed's outlook so uncertain, maybe dialing back on leverage is a smart move. And second, focus on quality. Stick to those assets like Bitcoin, Ethereum, and XRP that have these clear institutional catalysts we've been talking about. Which leaves us with the final and most important question. We're watching these two massive forces collide, deep-seated market fear on one side and this relentless new wave of institutional adoption on the other. So is that institutional shield strong enough to win this tug of war? The answer to that is probably going to define the entire market for the foreseeable future.